Good morning, everyone. This is Vance Williams out of the United States, here in the Seattle area. It's Thursday, May 29th, and welcome to my live Forex trading show. In addition to my analysis today, I'm going to touch on that 5-year range that price has been contending with that we've been talking about for the last couple of months. We'll do our usual stuff with price logic. Now, before we begin, just to let you guys know, thank you, everyone. We did fill up on our positions in the Ultimate Training Program. People said they were going to do it. There's a chance that one or two might not. So if you're really interested, email me. Contact me on the website. There's half a dozen ways to contact me. It's very easy to find me. Just let me know, and I'll put you on the alternate list. And even if it doesn't open up this time around, you'll be first to know next time. And so we'll open it up again in 3 to 6 weeks, just depending on how busy I am. And thank you guys. It's been really great talking to people. I have enjoyed this so much. I've actually, when I talk to someone new, when I do this and open this up for a little while, I actually go for long walks and talk to people, and I've really enjoyed it. And some of you guys listening know who you are. It's really neat meeting all the people around the world. On market conditions, obviously we're in prime trading hours, 3 a.m. to 11 a.m. right now. We're right here at, when the U.S. kind of kicks into its prime at 8:30 a.m. Eastern. We do have data that's coming out right now. It was just released for the U.S. for the gross domestic product, the GDP. It's preliminary numbers, but they're usually pretty good. And then we also had unemployment claims. Let me pop over to pound chart real quick, 30 minutes, see if it's reacting very much to that information. It's not, just a tiny bit. So we'll get back to that chart in just a minute. We also have pending home sales coming out at 10 a.m. Eastern. I don't expect that any of this information is going to, really move the market in a big way. This kind of information that we're seeing here coming out this morning is, traders and investors usually have a good feel for what this information is. All right, so let's go to that monthly chart. We've been talking about this 5-year range for the last couple of months, how it came close, and then finally, after a couple of months, it closes above. Then we talked, last week, the central banks made their policy very clear. They're not going to allow currencies to be competitive in such a way that a currency is devaluated. That's about as clear as you can get. I don't know if we call it manipulation anymore, if it's just the normal thing in the world. But they're pushing right now. That key level is 67.36, and price is currently about 20 pips below that. And I think based upon what everyone knows about technicals, they really do want to push this in. So we've got a couple of days left in the month. We really have just today and tomorrow in terms of trading days. So we're going to see if that candle closes back inside, and naturally on my printed analysis Monday and my show on Tuesday, we'll come back and revisit that. So we're hoping for a long-term trend, but like look over here, like prior to 2008. Look at this. These are long-term trends. This was just the the collapse of the markets, and then it's just been sideways for 5 years. So we'll take a look at that. But yeah, I was really wanting the markets to competitively determine the currency prices. But also, I'll probably talk, if we do close in here, I'll probably talk about how the central bank's policy could be a good sentiment indicator in and of itself. So we'll come back to that. All right, so let's pop over and take a look at the euro. We have a pretty strong supply area right here at 136.13. I have it marked as a key level. That was probably based upon a Fibonacci that I had sitting probably in this area right here. Yeah, right there. You can see the confluence there. But this is 136.13, closed above it, stayed above it, and so this was probably a good bet that it was going to be headed up, and that's what it's doing now. So you have the moving averages turned over. We're above this key level, and so now what we would do, again, we're looking for two things: buyer or seller, high probability advantage, and two, an advantage that's strong enough to enter and exit with good risk management. So since we're coming into that right now, let's go ahead and drop to the 5-minute and see what we've got. we've been having a little wave movements here. This is actually a small wave that move up from here to here, and then now you've got a second wave, basically from here to here. So it's only about 9 pips of strength in terms of pushing through these sellers right here right now. And what we'd like to see is this stretch out into 20 or more without pulling back to 38.2. So that's something that you guys could be watching for right now. If you're in level 1 of my program, you can trade any pullback. You can trade as long as you're trading in the direction of the trend. Any pullback, 23.6, a banana in the road, it doesn't matter. If it pulls back right now, you can take the trade, and then you're looking to get in and out at the correct prices, which I require everyone to do to show that they know how to do, regardless of whether they have a week experience or 8 years of experience. So it's important to be able to get in and out at the right prices. So really simple. Lots of opportunity, pretty much a trade at all times at level 1, level 2, level 3. You guys know what to do. Moving on to the pound. So that's the euro. Moving on to the pound. The pound, I've set up some key levels at 6,700 right here, where you can see price is stalled, and it's just really obvious. So if we want to consider a sell on the pound, the high probability advantage will begin to occur below 6,700. And they've had time to take some profits, consolidate, push again, pull it off, and this is about the 76.4 level that the market's showing me right now, 67.38. But to buy, we need all this money to turn over. You'd have a little opposition, and then we move probably into this area for a really good high probability trade. Let's take a quick look at the Australian dollar. Yesterday there was some high impact data probably that fired this up. I'm personally always skeptical about price movement in off U.S. and London hours. The bottom line is the behavior is a little bit different. It's not quite the same behaviors we see with the pound and the euro. So if you're going to take truly live trades and high probability trades with the Australian dollar or the Kiwi or any other pair, you're going to really need to master the behavior of those pairs. So the behavior is going to be a little bit different here, but in terms of practice, you just have to. I personally would like to see what we had just above here. So let's go here and take a look at that. Yeah, it actually just never pulled back, and it just kept going and going. Yeah, this is kind of usual for the Australian dollar recently, but unusual in terms of the type of behavior that we look for to give us a high probability advantage. Kiwi is in a range right now, and you can see pretty obviously that there's a key level right here. Price needs to push through because it's got exhaustion, then corrected a bit, and now it's maybe trying there again. Or let's see if we can get a good read on where the top side would be in terms of turning over. That's probably too high, so we're going to drop down to here. Yep, it's right there. Okay. So it did move above there, but then pretty quickly moved back inside. So that's probably going to be the key area where this turns over and the buyers create a high probability advantage. But again, keep in mind that the Kiwi and the Aussie are going to have a little bit different behavior. Okay, so let's go back to the 30-minute. Euros, remember, see that was a weak move. That was 9 pips. That's why you want to wait for that high probability advantage to show some real strength. Otherwise, you get, trapped in a head fake, something like that. One of the things I've been telling people that I've been talking to is it's really important that what you're doing makes sense. In other words, you really go, oh, okay, that's why I put my stop there. That's why I put my target there. This is why I'm making my decision about the direction. Everything that you're doing should make sense. Okay, and that actually came from talking to people. They go, yeah, this makes sense. And I say, it should make sense. And everything that you do in life, or just about everything, should make sense. I mean, obviously not when you're first learning, but when you're really in the game and you're actually risking money, everything you're doing should make sense to you, right? I mean, it's not different from anything else in life. So keep that in mind. And then the pound's just kind of right there. So we'll keep an eye on that. Let me see, anything else I have to say? No, again, if you're interested in my training program, the Ultimate Training Program, write to me. And even if no spots open up, you know, if someone doesn't follow through or whatever, you know, or let's say nothing opens up, you'll be first to know next time, and you know that'll open up in 3 to 6 weeks. Like I said, the reason why I close this is because I personally follow everyone, and if I get too busy, I just close it up for a while. But thank you again for your interest, everyone. Also, you know, thank you for joining us today for my live session or our live show. I'll be back next Tuesday. To our members, well, it's about 40, 50 minutes or so before we get together in our live trading room to follow the market together. So I'll see you guys then. Thanks, everyone, and have a great last couple of trading days of the week. Bye now.